In a financial crisis, the Aussie dollar often tumbles as investors flee the risk currency. Conversely, the gold price often surges because gold is considered a safe haven. An Aussie gold investor would make money on both moves. Your gold becomes worth more in US dollars and even more in Aussie dollars. Compare this to what happens to an American gold investor in a crisis. Their dollar currency is a safe haven. The US dollar surges during a crisis. This decreases the benefits of owning gold as it cancels out some or all of the gains foreign investors benefit from. Usually, gold surges faster than the US dollar, making gold a good crisis hedge for Americans, but far less beneficial than for Australians. The exchange rate supercharges their gains in gold during a crisis. You should thank your lucky Southern Cross for the privileged position you're in as an Aussie gold investor. I do. And right now could be a great time to invest in gold. In the last two bull markets, which began in 1971 and in 1999, the largest gains were not in the early years. Double-digit gains came in the third, fourth and fifth years as acceptance of the reality grew and more investors piled in. This means the sweet spot to participate in the current gold bull market could be right now. But if you are going to take the plunge and invest in gold, don't let the Aussie dollar steal your gains. Having the exchange rate interfere with your returns on gold can be frustrating. While it supercharges your profits during a financial crisis, it can steal your gains in the meantime. But there is a solution. A currency hedged ETF allows you to bet on an asset price without having to worry about the exchange rate moving in the meantime. It can simplify things by taking currency risk out of the equation. Because commodities are valued in US dollars, this means currency hedged commodity ETFs are popular in places like Britain and Europe. People wanting to bet on commodities but without the exchange rate risk can use these ETFs to isolate the bet they're looking for. If you want to bet on the gold price in US dollar terms, Australia has a currency hedged ETF called the Beta Shares Gold Bullion ETF, currency hedged. The ASX ticker symbol is QAU. This is not a recommendation because I have no way of determining your own personal circumstances or goals. It's merely an option for you to check out if you want to do it. The performance of this ETF should match the US dollar gold price. If you decide to invest in gold via this ETF, it shouldn't come at the price of selling your physical gold, which has a different purpose, to protect you. This ETF should go up in price alongside gold without the Aussie dollar reducing those gains. Meanwhile, the physical gold you hold in Australia will see less of a gain because it is subject to the exchange rate. However, once a crisis strikes, your Aussie dollar gold should soar in value even faster than this ETF, thanks to the exchange rate exposure.